Alright guys, today is Monday. I'm just going to go ahead and do what I normally do on Mondays. It's the beginning of the week. I didn't do this Sunday because I didn't get a chance to, but today I'm basically just going over what I usually do for market structure and getting ready for a week, getting ready for my trading week, and how I analyze the markets so I can make money with this. And so what I do is I choose a pair. I don't really talk about fundamentals much. I'm going to start talking about fundamentals more on my channel, but for today, guys, the first thing I'll do is I need to know where the market's going so I can make money off of what I'm looking at right here on the screen, right? So the first thing I'm going to do is, well, it obviously looks like it's going down, right? Okay, well, I need to confirm that. So here's what I'm going to do. I'm going to start from right to left with my market structure, and I need four pieces of highs of four pieces of market structure that breaks a low or a previous point of structure. That's a valid point of structure. So we have, let's see what we have here. We have a low, we have a high, we have a low, we have a high, we have a low, and we have a high. And the reason why I'm not going to continue going backwards is because we have enough pieces of structure to have a valid point of direction. And the reason why I say that is because, well, first, let's ignore these current pieces of structure. Let's look at before here. Let's look at the structure that happened before we reach this point. Behind the red line, not before, behind the red line. Okay, so if we look back behind this red line, oh my fucking god. Son of a bitch. This fucking screen just shut off in the middle of me explaining my fucking tutorial. It's a fucking ass. Alright, let's see. Once it stops being an asshole, then I can finish explaining. Oh, and that's nice. It didn't save anything I did, but that's cool. I'm not gonna edit this. I don't have time for this. I'm just gonna see everything on this channel. All right, so we have a low, we have a high, we have a low, we have a fucking high. Just ignore this shitty structure. We have low, fucking high, and all that funness. Just ignore it all. All right. So basically, we have our market structure. We had, let me do this again. Look behind the red line, okay? So this low is a valid low because it broke a previous point of structure, which is here. Okay, it broke this point of structure here. This point of structure is where price broke. And not only that, the high before this low pushed it down, and the low here, what did it do? It broke this other previous low. So we have a valid, this is a valid low right here. And this, can you stop being a fucking ass? God damn it. Alright, so we have a low there, and we have a low here. So this low is valid because it broke a previous point of structure. This low is valid because it broke a previous point of structure. This high is valid because it pushed and broke this low. And this previous high right here is valid because it pushed this. So these are all, they all correspond. They're all flow in one. So these are all valid pieces of structure that broke something, okay? Each one of these structures broke something, or is a result from it. So this current structure now that we know the trend and we know the direction is down, what we're going to do is we're going to go within our current range. Now what is that? Our current high and low here. And if we notice, our current low actually broke our previous low back here. So this is telling me that there is a probably 70% chance that price is not going to go higher, or sorry, not going to go higher before going lower. So that means I'm going to focus on just this current high and this low. And what I'm going to do is I'm going to look at the top of the range. So if I put my line, my mouse right here in the middle of the range, it kind of divides it in half, right? So if I'm selling to make money, I need to sell at the top of the range rather at the bottom, because the most of the movement happens at the top. So I'm going to look for points of interest or boxes supply and demand above on the upper part of the range in this current piece of structure here. So I'm going to look on the 13 minute, the 14 minute, and you can really only do this when you have pro. That's why people don't find trades, because you need to invest in yourself and get TradingView Pro so you can look at all these hidden time frames that show you fair value gaps and supply and demand that you normally would not see, okay, on just the 5 minute and other minutes. So we're going to go ahead and just keep searching here, and this, yes, you do have to keep doing this. It sucks, but this is what you need to do to be successful. So just go here and look at all the different time frames until you find, let's say, a supply zone. And then what you would do is, once you find your supply zone, you're going to want to go ahead and wait for another one to reveal itself, which could be here. If you noticed, once it came up to this box, we had a little mini order block pushing and breaking structure here. Okay, so what you can do is you can also enter here, because you have confirmation because this price broke the previous structure here. And we're going to ignore this gap breaking structure up here, because the whole point of us taking a trade here is because we're in bearish structure, down structure. So we're not worried about price reversing on us right now. So what we're going to do is we can enter a trade here, and then you can actually look to take profit here. So if I go here, and this is usually what I do, guys. And so where am I going to take profit? You're going to take profit on the area that is liquidity. So where are available areas of liquidity? So we have here, we have some lows here, some double lows, double bottoms. So we can mark that off as liquidity there. And then we can drag our mouse to the screen, or our risk to reward tool. And so we get 20 pips there. So you can do that to be secure. Or what you can do is target this. This is another take profit area. I'll show you all the levels that you could use, all the take profit levels. Okay, guys, so here are all the available take profit levels that I would normally take off of. So I would target here, and then I would look for the take partials here and take part of my trade there. And then as you get downward, I would move my risk to reward here, and then as we would go down if we needed to. But yeah, guys, that's basically it. And this is basically how I take my trades. And then you would draw your stop loss line above right here, your supply zone, SL, for stop loss. And then if you want to be really, if you guys are beginners and want to be more exact and more like a kid, you guys can literally put the entry right there. Put another line right here where you're entering to be more exact. And then what you would do is put your entry line right there. Okay? And this was just a quick tutorial on what I usually do. And yeah, guys, I'm actually going to go ahead and look at, yeah, we have some more time to look at another pair. So I'm going to go ahead and look at some more pairs here. Okay, so let's see, US dollar, Swiss franc. Let's look at this pair. These are some older pairs that I had. Market structure, okay. Okay, so we didn't break liquidity above there. So what that's telling me is price reacted off of that mid zone right there. You see that gray box in the middle? I originally thought it was going to come up here before going back downwards. And sometimes it doesn't do that. Sometimes it'll come back and just take this part and come up and take this much of the gap before going down. Oh, that is just beautiful. Right during my video. Right during my video. Isn't that nice, guys? Isn't that a beautiful sound to hear? Wake up right in the morning. Alright, so now that this broke structure, we can take our other box here and look for some more supply zones. We have another gap here, and we can look for potential trades. Alright? So let's get rid of this gray box in the middle to confuse you guys. So it looks to me like price already came back and filled this range right here, judging off of it breaking the double bottoms here, breaking this low here with aggressive momentum. So that's telling me price is on its way back downward. So we can actually probably look to take a trade right there. And I would feel comfortable doing that. Why? Because we had aggressive price momentum break structure. Okay. So we go on the 5 minute. I'm on the 30 minute. That's how it looks on the 5 minute. I drew this on the that gap on the 1 hour, on the 30 minute. Sorry, not the 1 hour, the 30 minute. So what I'm hoping for is price to come up to this area, entry at the middle of that box, stop loss right here, maximum make this more exact so you guys can see. Okay. And then your take profit would be the low here. Don't go all the way here. Don't have an invisible take profit. It should always be the next lower double bottoms. And if it isn't enough pips, then go lower, because that's just telling you the trade might not even be right in the first place. So this would be our take profit right here. Okay. And so yeah, guys, that's simple. I don't do a lot of crap here. I just keep things simple. I don't even trade every single day. I just trade when shit happens like this. That's why I get perfect trades. So basically, guys, this is what trade I'm looking to enter right here. And yeah, guys, so that was the second pair. Let's go ahead and look at something else real quick. I'm not going to trade this because, as you can see, you see that giant gray box? That gray box comes from here. I'll show you guys. That gray box comes from... Oh, never mind. I won't show you because it just disappeared. Look at another pair. I did that the last video. Let's look at this shit. Alright, guys. So, yeah. I originally thought price was going to keep going down here. So, what's it called? I entered a trade right there and lost last week, but that's okay because I already knew it could do that because there's all that price action up there. The reason why I entered last year because I thought I saw a Wyckoff schematic. I thought this was, you can look that up, it's a real thing, Wyckoff methodology, the Wyckoff method. I thought this was a redistribution or a distribution. So yeah. So now that price came back up and filled most of that range, I can look for another trade and actually take profit on these black lines you can see at the bottom here. Now what are these black lines? This is where high volume is and look, all this liquidity is sitting. As you can see right here, if you look towards the left of the screen where I'm pointing this arrow, all this liquidity right here. And this is actually going to be the area that I'm looking to take profit this week on all Australian dollar, USD, all USD 30 minute. So I'm going to look for some supply. We already filled that supply up there and we broke structure. We had some supply filled there. And we have an order block. If you can look, we actually have a order block that just broke this structure right there. And yeah, guys, I'm not a winner all the time. Look, I lose. You see the trade I just showed you earlier? This right there. Look, I lost 8 pip stop. I lost. I don't always win, but it doesn't matter because when you have a system that works, it beats the amount of losses you have. So the wins you have override your losses. So it actually really doesn't matter. And also, you won't get emotional about it because you already knew what you were risking, because that's the whole point of having a stop loss in the first place. Okay, so we currently have an order block here that broke this structure, and I'm actually going to make this bigger. It broke this structure, and it's going downward. So now I can expect what? How do I enter on order blocks? Most people are sloppy, which is, I'm not going to call it sloppy because I guess this is fine. Most people will enter off of this and just say and enter a trade right here, but I'm a little bit more precise. Order blocks, if you study them actually, if you study order blocks more, they tend to get filled 50% of the time. So they're filled up to 50% of the actual smaller candle of that block itself. So this tool that I just took out is called the GAN box tool. You can use it on TradingView. And what this does is it separates the order block and divides it in half properly so you don't mess up. So the middle green line, the green middle line right here where I'm pointing the arrow to on my screen here, the middle green line is where you're going to look to enter. Okay, and hopefully we're going to see a wick come into this, and we don't want to see any candle bodies go into our entries. We always want to have wicks, because smart money, what is it? Smart money always taps and goes. So we want to actually see a wick, and our stop loss would be, I can afford, this is only a 3-pip stop loss, so I can afford more of a risk than this. So I'm actually going to do it up to here. Now, why is the stop loss so small? Now, the reason the stop loss is so small is because when you trade smart money, this trading method is more exact versus retail. So most retailers are guessing and doing shit that doesn't make any sense. I'm actually trading precise physical locations in the market that smart money is actually reacting to live. Okay, so your stop loss actually ends up looking like this, and you have good risk to reward when you know what you're actually doing. Because the market, everyone has their own strategy that works for them, and that's cool. But in reality, the market works only one way. But everybody's strategy is just basically pieces and parts of that one way in their own language. Do you understand? So I'm going to make this my stop loss, and this is the 30-minute time frame. And that even gives me a bigger confluence, is that this is the 30-minute time frame. Okay, so this is an order block we're seeing on the 30-minute time frame. So I'm going to go ahead and zoom on, let's see, the 5-minute, and look, we have a fair value gap / imbalance right here. Okay, and I'm actually going to enter this trade right now while we're on YouTube and see what happens. So I'm going to go right now in my account, and I'll post the results on my Instagram. It's at dynasty_wolves, WOLVES. So this is AUD/USD, guys. So I'm actually about to enter here on AUD/USD. If I can find it and it doesn't be in it. It's always when you're about to enter trade, then it just disappears when you're trying to find it. So now, guys, I'm waiting for it to enter my zone, which it did. So now I'm going to enter the trade. So AUD/USD. Let's see. I have a big lot size. So I'm going to put 3 lots. All right. AUD/USD 3 lots. And the reason why I can afford such a big amount of leverage is because I actually have a prop firm account. I have multiple accounts. I have a personal account. I have a prop firm account that I get percentage off of every time I win the trade. That's how it works. You trade for a prop firm and you get percentage of the win, which the percentage is basically the majority of it. They get a small percentage of that win, which is still fine because you still make good money and you get a lot of leverage. So it doesn't really matter the percent they take because the percent you have is just so big. So you're just doing the same thing but with more money, if you understand. So now that we found a fair value gap on the smaller part of the range, on a lower time frame, we can actually go and enter here early, which I already did. And the reason why I didn't do this earlier because I'm just really intuitive with this. But the whole point is I can afford to enter earlier because this is a gap, number one, and number two, it doesn't take much from my stop loss because I was only risking up here 6 pips, and now I'm what, 8 pips? The maximum I usually would do is like 12 pips because I do very precise trading, and and this is a successful strategy because I don't trade all the time, so that's why it works so well versus everybody else. I only trade 4 times a week. So I'm gonna actually wait here, and you guys can see this exact trade results on my Instagram. If you guys want to know, it will be up there. This is Australian dollar, AUD/USD. The results will be on Instagram. You can screenshot it so you can see the price and everything to make sure I'm actually doing it. But yeah, guys, I hope you guys are all good. We have a little bit more time here, so I'm actually going to go and look at some other pairs real quick while I'm with you guys on this video, while that trade is running. So I'm going to go check Bitcoin again. Let's see what it's doing. All right, so nice. It went to my zone. Nice. All right, you see how it's in my gray box here? And you see how that purple circle? That's exactly where I want the price to be, and that's there. So this is actually Bitcoin right now. I'm looking to make money with this trade, with this liquidity right here, because that's where all these support and resistance buyers are looking to. They're buying on this line here. So what I'm hoping for is I'm waiting for a reaction off of this gray box here, this supply zone, and I'm waiting for structure to be broken. You see those two purple lines right here? Those lows that broke structure to lead to those highs here. So I'm waiting to see some unhealthy price action that can let me know it's reversing before it reaches this liquidity, so I can quickly leverage trade on hop on the 1 minute on my other platform and make some profits right there, make some good money right there. So let's see. Let's look at some other pairs real quick. I have a little bit more time. Let's see. A 30-minute. All right, guys. I'm going to have to end the video here because my fucking computer's dying. But I'll talk to you guys later. Check out my Instagram for that Australian US dollar trade, guys. I love you guys. I hope you all are doing well. Peace.